Exports are China's bread and butter, but trade tension and possibly weak global demand are bringing the numbers down. Now, China's economic troubles have been headline news. September brought in more troubling signs of an economic slowdown for the world's second largest economy. Now, exports, which is China's bread and butter, missed expectations by a lot. Now, why is this so troubling for China? And also, what does it say about the global economy? Now, before we continue, let me just say that if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. China's exports and imports both missed expectations in September. Now, customs data shows that Chinese exports grew by 2.4% in September and that imports grew by 0.3% in September year over year. Now, analysts were expecting much larger growth than this. Exports were actually expected to grow by over 6% in September year over year, so just completely missed the expectation. And also, China's trade surplus came in at 81.7 billion in September, which is down from 91 billion in August. Exports are China's bread and butter, but trade tension and possibly weak global demand are bringing the numbers down. Now, the United States and Europe both recently increased their tariffs on Chinese-made electric vehicles. We've covered this in shorts and previous videos on the channel, and the effects that that has on Europe, on the United States, and on China. But also, China's exports specific to the U.S. rose by 2.2% in September, and imports from the U.S. rose by 6.7% in September on an annual basis. Now, weak consumer demand, which has been an issue as we talk about Chinese economy and what they have going on and what they need to fix. It always comes back to that housing crisis that they have, and it always comes back to the consumer demand within the country. Well, as the data came in, it showed, just that for example, crude oil sales, it was down by 10%. The amount of crude oil that's coming into the country, 10% year over year in September. So domestic consumption of something like that is just, more proof in the pudding, however you want to word it. Consumer demand is something that the country really needs to address, whether it's through stimulus, direct payments, money to people, or however they go about it. But that is a core issue within the country, and in order to really get the economy to where they want it to, that should definitely be something that they focus on. Now, imports are expected to increase in the coming months as stimulus spending starts to begin. 200 billion yen from next year's budget for construction projects is also expected to be front-loaded soon. So we can expect that this type of activity will boost the numbers moving forward and boost economic activity at least for the next couple of months. Now, China's economy is in a tough spot. We all know that the economy is slowing down. It is still growing, but it is slowing down, and it could potentially miss their own target, that 5% target that they have. They are kind of on pace to fall just below it. Now, China has introduced stimulus spending, different type of stimulus programs for businesses, for local governments is a big thing, and these construction projects and things of that nature. But it's almost universally accepted at this point from economists and analysts, there is a calling for more stimulus to come out. Basically, larger spending, larger programs that have already been come out with. And I've said this myself personally many times on the channel, that money directly to consumers. Is if you can get that big huge consumer base to start to spend money, it could do wonders for the economy, just like the United States has a consumer base that spends very heavily, and the US economy just kind of moves because of it. If China can tap into that now, and more stimulus might be coming. It's to be decided what they end up doing. They have talked about increasing the amount of debt that they take on, the amount of debt that they put out in a given year, and all of that will just fuel economic activity. But there's almost a universal calling that's going on right now for more stimulus spending to really right the ship, to grease the wheels, and to get things going, because the stimulus spending that's been announced, while it was applauded, at this point you pretty much know that it's not enough in order to finish the job. And recent inflation data as well just shows concerningly slow inflationary growth. I think it was 0.1% in September for core inflation year over year. So really nothing going on right there. China does face deflationary pressures, and you are seeing it in the numbers. These are concerning. You want some type of inflation to go on. And third quarter GDP numbers are expected to come out in a day or two. So that's something that a lot of people are going to be looking out for. I'll definitely discuss it on the channel, but as of right now, the stimulus that China has come out with does not seem to be enough, and they are in trouble, it seems, of missing their own growth targets. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.